Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 4:30 in New York. It is Tuesday, August the 2nd, 2016, and we are looking at the Dow Jones Industrial Average after being down in triple digits, closing off about 90 points on the day at 18,313. S&P 500, this of course the E-mini, off about 0.5% at 2152. Crude oil also taking it hard today, off really about a full percent, now below $40 per barrel at 39.67. And lastly, dollar index under pretty tremendous pressure, down over 0.6% at 95.09. Let's take a look at our first chart. So traders, we were absolutely correct in assuming that the recent pressure that we have seen really at the tops of these markets. When I say pressure, what I mean is that we had these series of equal highs coming in for about the last couple of weeks. We talked about the fact yesterday that the market actually opened above the record top, that's this red candle here, but closed well below that, although we did get a higher high and a higher low. What was significant to me is the fact that it closed below this barrier right now. We'll call this the ceiling, so to speak, our new glass ceiling in U.S. equities. And today we absolutely did see this market begin to sell off, closing down about 10 points, which in terms of net losses over these last couple of days is really a greater move than we have seen. We're also noticing a couple of things in terms of a straight candlestick pattern. This isn't engulfing bullish, although you've got such a small body size here. You do have the red candle, meaning yesterday's trading activity covering that. You do get a confirming candle on a daily candlestick pattern analysis. It does put it into a sell signal. If in fact this market continues to drift lower, the areas that I'm going to look at is going to first be this top right here, which comes in at 21.20, 23% retracement comes in at 21.26. So I would look at this particular band right here is the first level that we would look for support if in fact we see this market track lower. U.S. dollar index under some pretty moderate to strong pressure today, trading off 0.64%, 61 points lower to close just above 95 at 95.09, 95.10. You can see that it just did tick in terms of the print itself. Now, that's significant pressure when we look at where the market was to where the market is. At the same time, if we take a look at the euro dollar, which is the currency that we're looking at the bottom half of the screen, well, of course, we're typically going to get that reciprocal, except that the dollar index accounts for a basket of currencies, one of which is the euro. So you're not always going to get, or certainly wouldn't always get, a 100% correlation, but you do get a very, very close correlation, which is why I have paired these two currencies up against each other. Now, in terms of potential areas of support, you'll notice this top right in here matches the lows that we hit, which are coming in roughly at 95. If that doesn't hold, there's a really important level at about 93.80, call it 94. If we draw our line across, we can see different areas where that really was a supportive area for the dollar index here. Here, of course, here we broke solidly through and went to 92, which is the level below that, of course. But also here, and to a degree here, of course, it did break and move back up. But you can absolutely see that if the market does not hold 95, which is that current level and the low that we're at, and I think that it could drift lower, by the way, the price that I would be looking for on the dollar index is roughly 94. And so traders, lastly, I do want to take a look at crude oil. Crude oil breaking below $40 per barrel, 39.69, off almost a full percentage, 38 cents per barrel in terms of the drop. We really did nail this one in terms of our forecast models that we were looking at. If anything, we were a little bit too conservative in terms of where that sell would come. My target is still 39 or 38.93. However, we're very, very close to it, and that's a 50% retracement. And my sense is right now, we'll have to see if this market continues to drift lower. I don't see any reason for it to go up right now. But if in fact it does, will it react? Will it find some sort of support in this area? Because it's, to me, 50% is always a minor level. And then when we look historically across the band of data, we don't really see too many price points that are giving us any real evidence, like this top here, for example, or this bottom here, for example, that this is a really important number. If it breaks through there, the 38% retracement comes in at $36 a barrel. Now, if that seems low to you, just remember, we are coming off of these lows at $26 per barrel. And so I believe we still have room to the downside in crude oil. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.